Good morning, traders. It was our night. I believe we woke up well. I want to bring some trade setup. To bring you some trade setup this morning. I have some setup I'm looking forward to trading this week, and I'm waiting patiently for them to get to my entry point before I execute. Okay, and I'm going to start from DXY. Of course, if you look at DXY, I remember this trade setup. I may not be going to higher time frame to show you some analysis, because if it's just maybe market recap or uh, weekly program on Saturday, that will have to break the market down from top to bottom. But now it's just a trade setup we are trying to look at. So we just go straight to the lower time frame and check what we want to check. Okay. So you see from this why, see right now you have some divergence. You have some divergence, which shows that this move to the downside will come. So we're actually expecting a corrective structure here, but we don't know how big that corrective structure is. But like here, we're already seeing what look like a three-wave structure. We want it to come down here to complete. Okay. We don't know, maybe from this level to make a move to the upside, either make a move to the upside, or alternatively, it can also decide to make another three waves move, three waves pull back here, and then drop, and then drop. Okay, it's from this drop that we'll be expecting it to make a move, a good move to the upside. But we need to see what happened after this equal legs has developed. Okay, what I mean by this equal leg, this one made a pullback. We want this leg to be equal to this one. We want to see what happened, and that equal leg is going to finish at 105.0. Okay, equal leg will end at 105.0. At that 105.0, we want to see the reaction of the market, and we'll see how other pair will unfold. But be that as it may, when it gets to 105, it's either it make a move to the upside in an impulsive mode, or it corrects itself for more push to the downside. Whatever it will do, we will see it that time. But we expect DXY to have a reaction at 105. All right. Okay. AUD USD. Since we're expecting a DXY to have a reaction at 105, the same way we'll be expecting some major to drop at the next psychological level. Okay, so if you look at AUD USD, I've seen some people who are forecasting that AUD USD may be going to the upside this way, but I do not want to subscribe to that, because I'm seeing a structure here which is three waves down. This is 1, 2, and 3 waves up. Then those that are subscribing to the move to the upside, they are saying that these three waves is okay here. Okay, but when you look at it, if you take the fib extension of this leg back here, you will see that truly this one is already at equal legs. So if somebody forecasts that this one will keep going to the upside, the person is right, because there's equal leg. Okay, but what I'm looking at is that other majors may likely drop, and if they drop, this one might follow. Okay, so if I know this one might follow, then it will not be wrong for us to think that this might be a corrective structure. Okay, after this leg, this might be a corrective structure 1, 2, and 3 for one more breakdown. Okay, for one more breakdown before any buy opportunity to the upside. And if you look at the structure that we have here, it really look like an ending structure, guys. It look like an ending structure. Look at it. It's an ending structure, guys. If you go back to your indicator and you try to check divergence, you see that there's a clear divergence here. Okay. Based on that, the move to the upside, to the downside of this pair is non-negotiable. Then how do I join the move to the downside? I want to see the market make an action before I react. Okay, I want a break of this major area. Okay, sorry. I want the market to give me a break of this level, guys. Just want a break of that level to be sure that the move to the upside in this ending structure is over. Okay, so I'll look for corrective structure back to my area and then take a sell to the downside. It's as simple as that, guys. That's how you're going to approach this. And if peradventure this structure, a market that is about to make a move to the upside can also start in this slow start, okay, which we call a leading diagonal. So if this is a leading diagonal, we are going to have confirmation for it when we have a three-wave breakdown to the downside. That will be the easiest way to identify that this is a leading diagonal. So we're going to have 1, 2, and 3. So once this three-wave structure end at 50 to 61.8 here, 50 to 61.8, okay, if we end here, guys, then forget about the wave to the downside. It's not going to happen. Now, what you are going to see will now be that at this demand level, I'm going to see this pair commence a move to the upside. And in that case, it means that the leading diagonal is with 1, then you have with 2, then here you have with 3 to the upside. That's what we are looking at in AUD USD. SZD USD, same story. Of course, I gave this trade right here. Okay, that after we have seen this ending structure here, okay, and with a clear divergence, you can see that we have a clear divergence for it. This one is making a lower low here. Can you see lower low here? But here, instead of lower low, we're getting a higher low. Okay, based on this higher low, guys, we know that there is divergence, and that confirms our ending structure. So all we have to do next is to see how this will be broken. When this was broken, this correction, I don't take it, it's too small. Look at it, this impulse, this is correction to 38. I needed the correction to 50 or 61.8. It didn't give me, and that was not my trade, guys. You know me, I don't take 38% retracement. Okay, this one now make a move, okay, in a three-wave structure. So I needed a corrective structure, a balanced corrective structure, and you got it here up to 50 to 61.8% retracement of this impulse. That's why I took this trade. You can see it here. I gave this trade to the general group and I forecasted that it was going to end here. Okay, and see it's getting close. It's getting close, but it's like it's losing stream. It's losing steam. Okay, but it's getting close. So if what we discuss in AUD USD, if is to be replicated here, then we may end up having a 1, 2, 3. Okay, then you have 1, 2, 3 back to 50%, and you now have a move to the upside. Okay, so this three-wave structure will be a leading structure called a three-wave impulse. I'm going to treat this as a three-wave impulse if this is to continue to move to the upside. Okay, three-wave impulse. And where are the waves? You know, somebody is confused here. Where are the waves? This is a corrective structure in the middle. Corrective structure in the middle. This is one wave here. This is second wave here. This is third wave here. We need it to correct to 50 to 61.8. So you just take a fib this way, okay, this way, and then 50 to 61.8. All right. So from there, you have a move to the upside. Simple. You get it? So that's what we're expecting on NZD, USD, Euro dollar. Okay, Euro dollar. What we're expecting here is simple. I had a look at Euro dollar, and I'm looking at a structure, and that is exactly what I want, guys. Okay, of course, you see that we have this initial impulse. Okay, so I want to look at this as 1, 2, and 3. Okay, and look at this one again as 1. This is a running flat in the middle, and 3. Okay, so if I've gotten it like that, then what I'm looking forward to is 1, 2, and 3. And by the time the last 3 comes down, this impulse here will have made a retracement of 50 to 61.8. Right at this level, we want a continuation to the upside here. That is what I want to see in Euro dollar. So any sell move here, I'm not going to trust it to be a big sell to the downside, because you can see the wave in the middle is very corrective. Okay, and it suggests to me that it's correcting these first 3 waves here. So if we have a 3-wave push down, guys, that may be the trade to the upside. So I'm not looking for downside in the majors right now, and any downside we have in the major now, I want to treat them as a correction of the previous move for us to have a buy opportunity to the upside. All right, so that is Euro dollar. What we can do is this. What we can do is this. We can allow this leg to come. Let it bring itself down with this leg. Then we look for correction to 50 or 61.8 and take this leg down. Okay, we set this leg down, close the trade here, look for reaction at this level at exactly 1.00. That is the psychological level of parity of Euro and USD. Then from there, you can take a buy opportunity to the upside. That's what we expect from Euro dollar. And then you have AUD USD. Okay, AUD USD, of course, on this pair, what we're expecting is simple. It's a corrective structure. You see, this is 1, 2, 3, 4, and 5. Okay, this is 1, 2, 3, 1, 2, 3, 1, 2, and 3. Okay, so this is impulse, which is with A of an impulse. This is WXY, that is with B, WX and Y, and that is with P in 3 waves. Then we're looking at 5-wave structure here. 1, 2, 3, 4, 5. So if you have a structure in mind, you allow the structure to give you enough data for you to be able to say, this is a confirmation of what you want to do. So right now, we're not thinking of catching this one from the bottom. No. We're not thinking of catching it from the bottom. We want it to present itself to us. Let it make the first impulse here. After it makes the first impulse, guys, all we just have to do is we're going to take a fib of that first impulse when it is done, and we expect a retracement back to 50 to 61.8. This is where we're going to catch this guy, guys. And once we catch this guy from this level, we're going to break this top before it's over. So imagine you catch it at 1.4750 and you are going to 1.56. You know what it means? That's what we are waiting for. And only patience, guy, can get you there. Only patience can get you there. Impulse, corrective structure, upside. okay, as a completion of this wave. Impulse here, 1, 2, 3, continuation here. All right. So let's go to the next pair. Euro JPY. Okay, Euro JPY. What we are expecting is simple. All right, you have seen this. It looked like a three-wave pullback. So some might be expecting that we should have a wave to the upside, but we have a test. I have a test that I used to confirm if this move will be to the upside or a correction for more downside. And I use my tool, which is a divergence, to test it. You have this low has broken this low, so this is a push on its own. This is another push. I've broken this low, so I want to see a divergence between these two legs, this push and this push. I want to see whether I have a divergence or I have a convergence. Okay, that will give me an idea of what I want to do. This is a lower low here, and right here at the corresponding level is already a lower low. Okay, it's making a lower low. So for that reason, it means that the move of this market is still to the downside. So if it's still to the downside, then what do I need to do, guys? I just need to take a few, although this leg is not done yet, but just need to let it make a pullback, let it begin to buy. Then that will be the end of the move. Then you now look for a corrective structure back to 50 to 61.8, and then we can execute another leg to the downside. Okay, that is for this. And when this pull back effectively to 50 or 61.8, you can carry out a lot of tests to find out whether the continuation move to the downside will come. Okay, like this. If it's zigzag, it will come to 78, of course. To come to 78, we're expecting a buy opportunity in euro dollar. So that buy opportunity might be the pullback here. So you can carry out some tests later. You see this high, you see this lower high. You come to your indicator. This might give you something like this. You have the high here, you have the higher high. Okay, so when you have a higher high here and lower high here, this is a bearish hidden divergence, and it means that this is a high probability trade that will push harder to the downside more than this one, because on the indicator it's higher here. So that's what we're expecting on Euro JPY. Then you have a Euro GBP. Okay, using the same trick in Euro GBP, you have this push, you have this push, you have this push. So when you look at it very well, you see that for 1 hour time frame, you have a lower low here, you have lower low here, and you have a lower low here. So that's why we are taking this move to the upside as a corrective move for us to see more downside. Okay, that's why we are taking it for more downside. Right now we're in the buy. Okay, why are we buying? Because right here you have three-wave structure, 1, 2, 3. You have another three-wave structure, 1, 2, 3. Then what we're expecting is 1, 2, and 3. Once we break this top, we are taking our trade up. We're going to take our profit at 84.50, around 84.50 or 84.60. And there we have the supply at this level. Okay, we have the supply, and at this supply, guys, we expect this market to make another move to the downside, because we must have done this three-wave structure. But if you look at this three-wave structure, it looks like a zigzag. Okay, because this level does not get to this level. So for that reason, when you have a structure like that, it means that you have three-wave here, three-wave here. Then this three-wave here is expected to break this low to become a zigzag. Okay, by the time you break it, that's why I extended my TP, because I'm forecasting a zigzag for this leg. But of course, we cannot expect it to be a WXY in the form of a running flat. Why? Because if it has to be in the form of running flat, after you have this three-wave structure, this three-wave is supposed to break the slope. So that we now expect that the three waves here will not get to this top, and that will be a what? A running flat, a running zigzag. Okay. So, but based on what we have seen before us, we have three waves here, three waves here. Then these three waves should break this top. Okay, before we can see a leg to the downside. So we're already in the buy of this particular one at this level. Oh, sorry. At this level, we're already in the buy. Stop loss here. We'll take it to this place in the signal channel. We're already in the buy. Okay, let's see how it play out. And that is Euro GBP, JPY, guys, 4 hours. Okay, I've seen that GBP JPY is going to make this structure. Okay, contracting flat down to break this low. And then look at this impulse. Okay, look at 78. Why are we looking at 78, guys? The reason we are looking at 78 is because you have this leg here. We want it to be equal to this leg here. Okay, and if you pick a trend-based fib extension, drop it here, take it back here. You see, it's exactly at equal leg at this level. So we expect GBP JPY to come as low as 157.50. Okay, and at 157.50, we expect there to be a reaction. This leg should come to this area, 57.50. Okay, and once it gets here, this structure is complete at that level. Okay, it's complete. And then we're expecting a structure to unfold. And at that level, we have to see our divergence, to see this leg, this push, and this push. We want to see it from the indicator. Does it make a lower low? If it makes a lower low, then we're going to forget buying GBP JPY. All we're going to do instead is to wait to see corrective structure of this leg. Corrective structure of this leg back to 50 to 61.8, and we'll take a move to the downside. Okay, that's how we do it, guys. That's how we do it. Take a move to the downside. All right, this pair has effectively left us. Okay, we have analyzed that we have three waves here, then we have three waves back. We took a trade myself in the signal channel, and I also give this to my free trading community. We enter right here, guys. Can remember 73.75. That was our entry point. 73.65 rather. That was our entry point. Honestly, this pair has made 235 or 45 pips thereafter. But we close for one reason, guys. And the reason why we close our trade was because I was not comfortable with this structure that I was seeing here. Okay, and in most cases, when you see the structure playing out, although I did not check 4 hours, let me check. Okay, I was looking at 1 hour time frame, and I was seeing this structure. So I was taking it to be that the possibility of having 1, 2, and 3, and then breakdown is there. So I didn't want to give back my profit to the market. So I told my guys, we're going to close this trade. But look, guys, this trade is still going very far. Okay, this is just the beginning of the move, because you have what you have here is simple. You already have three waves here up. Okay, then three waves down. What are you expecting? Three waves up to break this top. Boom, and then you have a wave to the downside. Okay, what I have missed is I've taken the trade from the low. Okay, I've taken the trade from the low, but then we closed and it moved. Let it move. We have not missed anything, guys. All we are waiting for is impulse here. We want to see correction back to this level, and we'll take this last leg to the upside. This last leg to the upside, guys, cannot be less than 400 pips. We're going to catch it together, okay? So wait for it. Pound yen, of course. See, this is one of the pair I'm looking up to. Okay, this move has come here. Right here, the correction was happened so fast. You see that you have an ending structure here. Can you see the divergence yourself? Look at the divergence. That shows that that move to the upside is going to come. But we had wanted a situation where this will break, and then when this corrected to the right fib level, it happened so fast that after it was done, there was no way I would have chased the market. Look at it. Look at the leg here. Look at the 50 to 61.8 here. This is our entry, guys. Look at the demand level here. It's as simple as that, but it came down to that level so fast. And I noticed GBP card, except you said pending order, guys, it comes to your level so fast and move away so fast. Okay, does not give opportunity to enter, except you enter with a pending, excuse me, except you enter with a pending order. Look at it, it has moved. So what's our expectation now? Now that it has moved, no problem. All we are looking for is that we want GBP card to come to this level. That's when it will make a structural sense, guys. Okay, so if it has to come to that level, what are we expecting in order to catch up with it? What are we expecting? All we're expecting, guys, is simple. This will take the impulse of this move to the upside. It's already a 5-wave impulse. Then we look for correction to 50 to 61.8. Then from there, we look for a move to the upside. Okay, we look for a move to the upside. That's what we're going to do for GBP card, guys. GBP card. Then GBP USD. Okay, GBP USD for daily time frame. Let's look at daily for this one. Okay, we also want a situation where this pair cross this level, cross this level before we can sell to the upside. This supply here within a correction, I don't respect it. Okay, I don't respect any supply level within corrective structure. You can write that in your note, and take note of that. Any supply level within a corrective structure is not to be taken serious. Why is it that you don't have to take it serious? Because if that supply is so big, guys, it's supposed to proceed to the downside. Why did it turn? Immediately it moved down. Why did it turn? Okay, so that's why I don't respect it. But you can see the supply that you have here. It's a very good one because it pulls down very hard. Okay, break structure, pulls down. So we're expecting this to be a confirmation corrective structure before we can make a move to the downside. That is it on daily. Then when you look at it on 4 hours, you can see that it's rather going up too slow. Okay, it's going to the upside too slow. But you see, the way it's making a move to the upside here, it's also making a higher high on the indicator. That's to tell you that you should not be looking for sell opportunity right now on GBP USD. Rather, what you should be expecting is a moderate corrective structure. Okay, probably to this level. Then, after that moderate corrective structure, 3 waves, you now have a push to the upside. Have a push to the upside. At least let it break this top. From here, look for sell opportunity to the downside. I believe you can understand, guys. Okay, so right here, we're having a trade coming on a USD card. Why are we having, why are we looking for this trade? You see, this is a fine impulse. Then you have 3 wave here, 3 wave here, 5 wave down. A, B, C structure. Clean one. A, B, and C structure. Okay, and then you have this move. This wave to the upside is coming. It's gonna come, guys. That wave to the upside will come. Okay, then how do we catch it? If this our analysis is correct, then we should see an ending structure here. Oh yes, we have seen the ending structure here. Somebody will ask me, what is an ending structure? After you've seen the impulse here, you see the market begin to decelerate here. Okay, the market begins to decelerate here. That is an ending structure, guys. All we want right now, guys, is for this move to break this internal structure to the upside. After I break the internal structure to the upside, guys, I'm looking for correction back to 50 to 61.8. That is what you see that I have schematically represented with this particular schematic. Okay, that is what I want to see. It doesn't mean that it's going to come to this level. I don't know where it's going to come. I don't know the level it's going to come, but all I want to see is that I want to see a structural representation of the schematic that I have drawn for you. Okay, I want this structure, this level to be broken. Okay, as soon as this is broken, guys, I want to see. I'm not doing break and retest because for you to, when you do break and retest, the problem you have with it is that sometimes it works, sometimes it does not work. When does it work and when does it not work? If the retest is coming to 50% retracement, but what if this corrective structure is zigzag? Will it stop at 50%? No, it will come to 78. And by that, you will have taken a buy at this level, 28.57, but zigzag is coming to 28.09. So your stop loss will have been taken. So that's why when you are doing trade break and retest, you are still trading like an amateur. Okay, so you need to upgrade, guys. You need to upgrade. Forget about break and retest. When you have a market that make a move upside here, okay, what will determine where it's going to come is, let me explain to you. If you have 1, 2, and 3, this is your effective break and retest. It worked for you this time. Why? Because the market does not form a zigzag. It forms a regular flat. But what of a situation where the market forms something like this? Is your break and retest still going to work? No. So what defines the appropriate level of retesting is the nature of corrective structure. Are you okay now, guys? So that's what we are looking forward to on USD card. UJ, guys, okay, the move in UJ is dependent on the move on DXY, because UJ and DXY, they are correlated, okay? And you know, of course, I told you in DXY, we expect it to come to 105 before any reaction, either a pullback or a continuation move to the upside. The same thing is applicable to USD JPY. USD JPY will not stop this sell until DXY gets to 105, where I'm expecting a reaction. Okay, I'm expecting a reaction. You know, I told you that this move is going to come. This move is going to come. But of course, you know, even some of us that forecast this market, we only forecast, we don't even trade up to 10% of what we forecast. You can't be everywhere. You have to have some pair you focus. Okay, you know, right here, I told you that I've seen a divergence and an ending structure, and I made it clear to you that the divergence is showing clearly on the indicator. So all we had to do is simple. All we had to do was this three-way structure. We had a pullback here, and we have a move to the downside. Okay, I took a little from here till I close for Friday. Okay, and it's still going down, guys, for about 677 pips, guys. So those that are swing traders, this is where they make their money. So when DSY is making a pullback to the upside, we also expect UJ to make a pullback for more downside. Okay, for more downside. So take note of that, guys. US 100, okay, US 100, this is a slow start. Okay, if you look at this structure, this look to have made a three-wave structure. One, corrective structure, 1, 2, 3, and then another one. This has made a structure. Its structure is complete. We don't expect more downside for US 100. So it looked like this wave here is a slow start of a move to the upside. So if it's a slow start, then we want it to pull back to around 50 to 61.8, 50 to 61.8 before we resume the buy to the upside. So I'm waiting patiently. When you are trading indices, you have to, reactivate your patience skill, guys. All right, because you need to have a pinpoint entry. All right, my pinpoint entry is at this level. Okay, I want it to happen here. Anything here, I can buy US 100. Anything outside this level, I won't buy it. Okay, that's US 100, US oil. It's going. Remember, we're at this level when I sent you a message to tell all the nations that depend solely on oil, including my country, Nigeria. Tell them that oil is coming down from 122. It was 123 that time. I said, tell them that it's coming to 88. I told you 88. That was what I give to you guys. Look at it, 88. Right now, it's at 92. That's the power of market forecasting. Okay. And then I've told my guys here, I give them exactly this level that oil is going to turn back. And I also give them at 88, take your profit. Either 87 or 88, take your profit, because at that level, I expect a reaction. Okay, because you have your three wave in the middle, you have your impulse, equal leg is ending here, guys. Okay, if you take your trend-based fib extension, this level, can you see? Equal leg is ending here. So anything here, this structure is balanced, and you can have a wave to the upside for US oil. Okay, BTC, BTC, BTC. You need to check something, guys. When you check this push, these two pushes now, where are the pushes? This push up and this push up. Let's check them with our indicator. Do we see lower low, lower high? Effectively same level. Effectively same level. So which means that a wave to the upside is going to come. A wave to the upside is going to come. And if a wave to the upside is going to come, then what am I supposed to do? I'm supposed to take a fib of the last impulse. Okay, if you take a fib of the last impulse, then you have this, you have it this way. So what I want to see now effectively is that look like this is three waves here. I want to see a pullback here. I want to see another three waves here to hit this low. This is my supply level, guys, because you can see this big candle in the middle. This is a supply level. So I want this market to come into this supply level. Okay, and there we look for buy opportunity to the upside, because we have confirmed for the aid of the indicator that there's going to be an upside. Okay, for people that trade trend line, you have it this way. Okay, you have it this way. You can see that we can do this. And again, another thing you can do is that as soon as this hits this level and you want to start buying, you need to check for hidden divergence. Do we have hidden divergence? You have this wave here corresponding to this level. You want to see whether you have this here making a lower low here. So if the indicator make a lower low here and you are making a higher low here, and then it started buying here, you have to buy, because this is a confirmation that this push you are going to get here is going to be higher. It's going to be more than this push you get here. All right, so that's it for BTC. Expect a buy to the upside. Last but not the least, gold. Okay, last but not the least, gold. Gold has started its move to the upside, but what we should expect now is either we see this three-wave structure. If you give another three-wave structure, guys, back to 50 to 61.8, okay, back to this level, you are going to buy gold to the upside, but it must give 50 to 61.8. But in that case, even if you give 50 to 61.8, you have 1 2 3 1 2 3 1 2 3. At this level, guys, you have to be careful because you might have another move to the upside. So you need to take your trade bit by bit, one after the other, one after the other. Okay. Last but not the least is AUD NZD. This is very painful, but it happens like that sometimes. Okay, that is why I don't want to get a setup close to Friday, because I close my trade. I don't let them sleep. Okay, you know. So when we analyze this structure brilliantly, we got a three-wave structure here. Okay, right here in the middle, you have a corrective structure here, a three-wave corrective structure in the middle here, and then we got a 1 2 3 here, and then we expected a three-wave structure here, which is one, a running flat in the middle, and another one. Can you see? And we pinpointed this entry here, that the extension of this leg here is going to give us our entry there. Can you see? Is how we did it. That is the end of the structure. And I gave this trade at exactly 1.1165. In my signal channel, we took it right here, right from the top here, guys, on the signal channel. And I told them that this trade is going to make a move to the downside, and we are coming as low as this level, guys. Coming as low as this level. Okay, but on a Friday, I had to close at this level. And then this corrective structure, we took a trade, but I closed it at break even because I was expecting a move up to at least 50 to 61.8. I don't take a salary retracement. Then the market moved down. I was still expecting this to come before I sell. It just made a boom to the downside. But that is not an issue, guys. That is not an issue, guys. This 1, 2, and 3 that you see, we're expecting another 1, 2, and 3 pullback. And in that case, it's going to be, when you take this impulse, okay, this level here, have to take a move to the downside. So we are waiting patiently, guys, to see a pullback, a correct correction, a fine one that we can define and understand very well. From there, you take a push to the downside. We're still going to catch it big on AUD NZD, guy. So that's it, guys. These are my thoughts about the market and how I believe the market will shape up for the week. So you just follow what I say, and then with what you know, combine all the reasoning and logic together to make an informed opinion. There are many, I can promise you, 80 to 90% of the forecasts I've made here will come to reality. Okay, I've tested the strategy, I've tested the trading system. In terms of direction, I am right 9 out of 10. It is very rare for my forecast to be wrong. Okay, the only way you can have a wrong forecast is if you say you are coming down, but you are going to have a corrective structure. If you are projecting a bigger corrective structure, the market might make a small corrective structure and push down. So in that way, you can't say you are wrong. because your bias is downside and the market is making downside. It's only that where you want to catch it, the market did not come there. Okay, and that is not a wrong focus. No, we are selling, but we want a bigger correction. It gave us a smaller correction that is outside our trading system. We don't trade 38% fib retracement here. We trade from 50 to 61.8. That is a good discount. All right. And so on this note, we are going to end the trade setup video this morning, and I hope you go through it and enjoy it well. So thank you guys. Remember to subscribe, like, and press the notification bell for on this channel so that you can help us to, to make YouTube to show it to as many that want it. All right. So thank you guys. Bye-bye.